What's up, everybody? Ross Quintana here with Hustlefuse, and today I'm doing my week one recap of my first week investing in the stock market. And I'm glad that you guys are coming along for the ride because when I started this, I read a blog post that was just somebody who was telling about how they got started trying to invest in the stock market. And I found it really useful because I feel like there's people, obviously there's experts and financial analysts and all this, but I kind of wanted to learn from somebody just like myself who didn't know anything about the stock market, what they did, how did it work out. And most of you guys may know me as a social media influencer, writer. I'm head of social for Adobe Partners, and I have my business Social Magnets. So this brand, Hustlefuse, is one of my brands, one of my mini brands that I have. And this is really for personal development, entrepreneurship, hustle, culture, all that kind of stuff. So I thought this is a good place for me to go on my ride as I play with the stock market and try and learn it, because it's an important part of every entrepreneur, whether you build your own business, you work with startups, or you're a millennial hustler, whatever it is. It's all about the come up. And in order to do that, finances are a big piece. Managing your personal finances is a big win. And if you neglect to invest in the stock market, I used to think, hey, stock market, that's stupid, because I did real estate for 12 years. And I was like, why wouldn't I want to invest in something where I actually had a tangible asset? You're just gambling over there on the stock market over a share or a piece of paper or whatever. I'm like, that didn't make sense to me. But also then you realize, well, unless you have $200,000 or $300,000 to be buying homes, I mean, I've flipped homes and it doesn't need that much necessarily, but it takes a lot of capital if you want to start investing in real estate. Whereas stocks, bam, you can get in and you can invest, with $50, with $10. Like now you couldn't do that really before. So real quick, the app that I use is called Robinhood app, and it's probably one of the most popular apps, mainly because it doesn't charge you a fee when you're trading, when you're buying or selling. Most of these other brokerage firms, even if they have an app, they may charge you $5 or $10 every time you want to trade. The problem with that is that it ends up making it so that if you don't come in with like $500 or $1,000 chunks, the fee ends up killing you, and you can't buy something, realize you made a mistake, sell it, because those fees only make your loss bigger. So I chose to do a Robinhood app. Love it so far. As a matter of fact, there's a link down in the description. If you sign up on the Robinhood app with my referral link, you and me both get a free stock. And that could be a little tiny $4 stock, or it could be a stock in Apple or Microsoft or something like that. It's a randomized stock that they give you based on, I don't know how they do it. I think you get like a 1 in so many chance of getting a certain, this level of stock, 1 in so many, like that. But I've already gotten some free stocks from people signing up, and hey, that's just more money in the account for me to play with and test and learn and do all this. So what we're going to cover in this video, this is going to be one of many different videos that I'm going to do around this series. And I'll put those all in playlists for you, so you can subscribe to those as too. If you haven't already subscribed to the channel, subscribe, and then you'll be able to subscribe to specific playlists if you just want to follow my investing stuff. Anyhow, this is going to be like, I think I'll do like a weekly video of just, here's what I did, here's what mistakes I made, here's what paid off, here's what didn't, here's what I've learned, and then probably share, here's what I'm planning to do next week. Here's the stocks that I like. Here's my strategy, and I'll also have resources for education. So I'll be out there sifting through videos and resources, and you go through all this stuff, and some of them are garbage, and some of them are really good. And one of the nice things about bringing my community along with me is twofold. Number one, you guys can share what you learned, so we can really amplify, reduce hopefully the learning curve and the mistakes that we're each making, help each other, and then share resources, share, hey, I did this is what happened, it worked really good. That's the reason why I'm doing this, because I feel like that will really help that learning curve. I love to learn things, and I go all in when I do something. So this is something I've been putting off, and it's about time. I get that, because it's one of those things. If you nail finances and you get good at it, maybe you're going to be total trash, but maybe you're going to be great. And if you get good at it, the people who are good at that really provides an asset that helps all your hustle that you're doing. You got a side hustle and it starts to make a little money, that's one thing. You learn how to invest it and take some of those profits and get that working for you too, even better. If you can go from a micro investment where you don't have much money, I shared a ton of articles on this stuff on different social platforms. One of them was on millennials, how they're having to use credit card just to pay for their necessities. Like why they can't invest in real estate. They're getting priced out of the market. But that's no excuse. A lot of people are hustling. They got nothing. I came from nothing. I got a big family. I got 8 kids, okay? So family of 10. There was a time we were making, clients were ripping me off and different things were happening. We were making $900 a month for a family of 10. Trust me. That's bad. That's not good. To making over 6 figures, like aside from understanding business and growing from nothing, which I think is always important, because sometimes you watch people and you go, do they really know what it's like to not have anything? Do they really know? That's why I started this series. Not because I'm a financial expert, but because I'm not. Because I don't know any better. Because I just download the app just like you might have just downloaded the app. Threw $100 in and said, hey, let's ride together. Let's see how this works. Can I turn this into something? Can I then scale it up if I learn how it works? Or I'm going to take a loss and I'm going to get out. That's why this series I think is important. That's why I'm spending the time to do this, to share this with you. So let's dig in. So the first thing that I did was I purchased a share of Microsoft. And here's the advice I'll say there. And let me start with a disclosure. Look, and I don't even know if you have to do a disclosure, but I'd do one anyway. Look, you can make money and you can lose money in the stock market. It's like anything. So you have to disclose to people that, be smart. I'm not a financial analyst. I'm not giving you advice. Don't go sell your home and bet it all on because I said something. I'm sharing with you what I'm doing with my hard-earned money. I earn the money, and this is how I'm spending it. But you may have a different style. You may try it and it may be terrible for you. I don't know. So, I just disclosed that, you're playing with money. And like anything, you got to be responsible. You got to, if you need to go hire, a financial analyst to tell you what to do or whatever, you could do that. I'm only sharing what I understand and what I'm doing. So if you do, copy something I'm doing, that's at your own risk. I'm risking, and that's what the stock market's all about. It's a risk and a reward. Some people's tolerance for risk is very low. Some people are, they're sitting there and they got $10, and it's the difference between them eating mac and cheese or not. Then maybe investing in the stock market, maybe go eat and pay your rent instead of that. But at the same time, it could be risky if a person has a bunch of money and then they just think, I'm just throw this in there, and they make a big loss because they're just getting started, they don't know anything, they're making mistakes. So a lot of the videos that I saw basically tell you, start small, right? Because you got to learn. This is a learning curve. It's different when you're losing a little bit of money and A, you can afford it, or you lose a little bit of money and B, you can't afford it. So you got to measure that. Let's be responsible about those things. Now that being said, I'm going to share what I'm doing. So I came in, I put like $150 in there. I think I put $50 first, and then realized that the stock that I want, some of the stocks I wanted to buy, they cost more than that. So I was like, okay, well, I'm going to put a little bit more. So my first share was Microsoft. And I bought that because, number one, I thought, okay, you look at their trends, on the app, you can say one day, you look at the little graph. Oh, how is it in a month? How is it in 3 months? How is it in a year? What's it done over 5 years? And since almost all of them were an upward trend, I was like, okay, this is a solid stock. Some companies that I actually thought were cool companies that I believe in, their stocks were like down, horrible, or they're all over the place, up, down, sideways. And I was like, oh, okay, that's risky, right? That's more risky if there's, I'm somebody who looks at patterns. So the first thing, and I'll tell you that I learned, is there's different kinds of investors. So there's people who day trade, if you've heard of day traders, and they're buying a stock and selling it the same day. They're buying it like sometimes within seconds, buying, selling. They're trying to get this, trick the little system and do all this. And generally the risk of that is higher. You're making a lot more trades. You can make more mistakes. And if you're working with those margins, you can, when you're cashing out that quickly, you can take a big loss. Then there's swing traders, which I think I probably fit into right now. And I think that I'll experiment with all these different things. Like there's swing traders who kind of like, they might buy a stock one day, sell it another day, or sell it 4 days later or something. And they're kind of playing the ups and downs, not really necessarily looking at it just long term. I would say I'm more of a hybrid. Then there's the long-term people who are doing the research, reading annual reports. There's a hybrid on, that are kind of going quarter to quarter. And then there's the people who are doing year, well over a year. They're just buying, maybe they're diversifying in an index fund that gives them a little piece of all of the key stocks in that sector or something. A lot of different types of investors. So first thing I would say is just Google the different types of investing strategies so that you can get an idea what might you want to do. For me, I think I'm kind of a hybridish, British, jolly good, a hybridish investor where it's probably like swing trading, but I try and not just buy and sell every other. I take things that are long-term, lower risks, who have a nice upward trend, like Microsoft. If you look at their graph right now, it has an up down, but it's pretty consistently overall on an upward trend. So even if you made a mistake and it went down longer than you thought, and you were only going to hold it for 2 or 3 days or a week, you know that that's going to rebound probably, and it's going to continue to go up. So you're protected by that. And so that's kind of, you can blend different strategies. It doesn't have to be just a pure one strategy and another strategy. So that's one thing that I tried to do. I bought Microsoft based on the fact that they also own LinkedIn, and I think that as a social media strategist, that platform I think is going to do really good. They're doing a lot of interesting things I think are going to really expand it and help it grow. I bought some shares in Zynga just because they were smaller shares, but they were in the top 100 popular shares. I bought a share of Twitter because I love Twitter. I grew my network really strongly on Twitter. And then one of my first mistakes, it was a mistake. I bought a bunch of shares in Maxar, which is this satellite company, because I saw a little news pop up, and there's the first learning point. Saw this news, they got a NASA contract. Well, actually, I had a client in the aerospace industry, and so I'd curated content on satellite technology, all this, and I knew that was really a booming upward trend going into that segment. And then I saw this, and I was like, they have a key technology. And they just got a contract. All those said, green light, buy. But the problem was the stock already took a jump when that news came out. So I bought it after the jump, and that's where I made my mistake, which is reacting to the news. And I'm going to say this. Most people, they buy a stock. There's two kinds of investors. They're buying a stock because they see the graph tells them, hey, it's good. And that's logical. If it's showing you a sign that it's good, then buy. But that's the opposite you want to do in the way that I am starting to trade, going on the patterns of buy low, sell high, because then you're buying it high. And what I've learned is when it juts up like that and goes high, it usually doesn't keep going. As a matter of fact, the opposite happens. People cash in and sell because they had it low and now it went high. And they want to cash in, so they sell, and it drives it down. And then when people see it going down, who just bought it on top, the ones who bought it wrong like I did, then they're panicking and they're selling, and then that drives it down even further. And then the people who thought foolishly like I did, I'm going to wait it out, it's going to come back, why would it have this good news and keep going down? Then it went further. And then even on a little stock, when you have a small portfolio, you can see that, and I'll pull up my stock here, my little graph. So this was my first week, and you can see this first, that first peak, right where it jets up to the very top peak, was right where I bought Maxar, because I thought, oh, this is good. And when it up, sold, and because I bought like 6 shares, I didn't lose like a big dollar amount, but even if you lose $4 or $5 and you just have a tiny portfolio, then my other little stocks that were gaining 79 cents and $1.15, like it tanked my whole investment. And all those lessons were learned in that first time, which was that, oh, I bought it on news. I thought it would come back up, right? And it was also a small stock, so I learned that if you buy more shares of a small stock, it actually ends up, the gains, it impacts your portfolio more than buying 1 share of Microsoft, which might go up $1 or down $1 today, and that's its daily volatility. Whereas one of these other ones that are small, if it goes up at $1 and it's a $6 stock, or it goes down $3, you're getting crushed, especially if you own a whole bunch of shares that then multiply that number. So those are the mistakes that I made in my first week. And you can see in the second one, I had learned about the big stock, little stock. I hadn't learned that lesson quite fully yet. And then I bought a share of, I bought some Twilio, which I thought was performing really good based on news. People said, oh, it was the best stock they bought, and it had all the right graphs. And then it just decided to go down, and I think that was because some news came out and different things, and it came down. But then it came back up, but then it started coming back down, and I thought, no, it's a good stock. I'm just going to hold on. That's where I really learned, it will come back up. News can definitely impact it, unless you want to ride that news out, and you have to discern, is that news long-term news, short-term news? I didn't know. This is the first time I've owned a stock, seen news hit it, and seen what happens to that, both for the good and the bad. When did you get in? What happened after the news? How long did it take for that stock, if it went down, to come back up? So these are all lessons I learned. What paid off for me this week? Stick with long-term winners. After I learned from those first 2 or 3 little dips, I learned to not stick around for the loss. That's why when you see it coming up, I had little losses, but I cut them, reinvested in smarter things. And so I didn't have that. The only one at top that I took there that was more of a loss was because that's a share of Adobe, and actually they had a lull, but then they have pretty good upside peaks, and I bought it where I thought the end of the low point of the lull was, the flat part. It kind of went down a little bit from there, and because I wasn't willing to sell it, because I know that it should be coming up, hopefully this week, I'm hoping, then I had to take that little bit of loss. But overall, once I kind of, at the bottom of that point is when I kind of learned a couple key rules. After that, my earnings went through the roof. So anyway, those are the things that I learned. Cut your losses, right? I'm not going to, unless it's a stock that I know is a long-term performer that has a short interval and it's going to come back, then I'm not going to just sit there and hold on to a stock and trust that it'll come back. You also have to listen to your gut. There's been ones that I thought, oh, this is the time to invest. I'm waiting for the right moment, all this and that. And then I just decided, nah, maybe it isn't. And the times when I didn't listen, I was like, oh, the minute I bought it, it starts going down, and all of the patterns are in it. And it's like, so I learned to try and listen to my gut if you feel good or bad. Don't get caught up in emotions. When I really at the bottom of that, when I really focused on changing my focus on today, I'm buying stocks when they're low, but I think there's upside, and then I'm going to sell when they're high, not think, oh, this is just going to keep going up. You need to know and have your set in the strategy that I'm doing right now. Know what are the gaps in that stock. If it regularly goes up from its low point to a high point, and that's a $4 margin, and you're planning on trading within that margin, then oh, if I buy Microsoft at 124, that's the low part. And like Microsoft here, I held onto it for a minute because even though I bought it at 124, it dipped down to 123.63. It normally never, that would be a low for the whole month in its up and down patterns. And so I'm hoping that then that goes up. I didn't get quite the bottom of the market on that. So anyway, next week what I'm trying, smaller stocks, taking a bigger chunk into one bet instead of too many little bets. I'm going to try that. And education-wise, some of the videos that I'm enjoying as I go through, and I'm basically going through looking at the top, like investing for beginners videos. The ones I've liked so far, Wealth Hacker by Jeff Rose, and I'll leave links in the bottom, and probably start a playlist of the favorite channels and videos that I found useful so that you can access those. I liked his style. He just mixes comedy in, and he seems like a smart and funny guy. Also, Financial Education is the channel name. His name's Jeremy, but he doesn't have his last name. He seems like he has some good information. He kind of, talks really fast and does all this stuff, but I find his information pretty good. And then Jack Chappell, I think I watched one of his videos, and he just seemed like he was pretty smart. He was a little all over the place, but I feel like he had some pretty good information to share, so I'll share those links. Stocks that I like going into next week, I don't even know if I was going to add this to my segment, then I thought, I might do it just to tell them some of my strategies in advance that I'm doing. I still am holding shares of Microsoft, which is down at 123, and I think that's going to get up to like 127, 128. It's my theory. I've got some shares. I got the share in Adobe, which is low, which I think should be getting ready, but I don't think it'll like grow real fast. So whether it happens next week or not, or how long it takes for it to go up, I'm not sure. But I believe in the company, and I think their patterns are pretty good. I don't think there's a consistent up and down as Microsoft, but I invested 40 shares in Plug Play, so we'll see if that goes up. I'm just trying more shares in a smaller stock, and that one was fairly popular in the under $5 stocks. So I'm just trying to see if it's going to make sense and it's going to go up. And then I have some shares. I think Groupon was a little undervalued, so I'm trying a similar small 10 shares of that to see if that works. And then Zoom was, I think, at a low, and I think that's a stock that's going to continue. It's been performing. Beyond Meat did really good. That's where I got one of those big upswings in Beyond Meat, because I think I bought it at like 98 and it went up to like 102 or better than that. And so, it's been small moves right now, but my goal is for next week to kind of figure out, and one of the things that I looked at was, if I'm putting, like, I have one share of Adobe, but that's $270. If that goes up $6, is there an easier way to make $6? Could I buy 100 shares of a small stock and do that? Is it easier for that stock to go up a dime or 50 cents or whatever it would take to get that versus this one to go up? So I'm just doing a little of an analysis on that. So that'll give you a little clue as to what I'm doing for next week. My Friday stock looked like that. So pretty solid. I'm still experimenting, but I'm feeling pretty good about it. So go ahead, if you haven't signed up for Robinhood app and you want to try it out, hit that referral link. You and me can both get a share of this stock for free. And you know what? I look at it this way: even if it's a $4 stock, maybe I was going to buy Microsoft at 124 and sell it at 128. That's a $4 gain, and I would call that a success because I cashed that money out. It's back in my account, and I can wait for that stock to go down and buy it at a good price and buy even more shares because of the additional money versus taking the long-term road and just holding on to it. That's where I'm starting. Doesn't mean that's the only way I'll invest, but now you know how I'm kind of what I'm thinking. And so anyway, that's the strategy. So we'll see. Smash that subscribe if you're liking the videos. We'll probably do a bunch of kind of smaller videos on here's why I'm doing this, here's what I'm doing there, to kind of share. But this weekly one will probably be like a 20-minute video where 25 minutes where I'm doing a recap of what happened in the week, what I tried, what worked, what didn't, and what I'm looking to do on the following days. So thanks for tuning in. Leave your comments. I want to hear where you're at. Did you just start investing? Have you invested? Have you made some gains? Have you made some mistakes? Share those in the comments below. Let me know if you liked the video, if there's something you want me to cover, and we'll keep crushing it. We'll look forward to this week. Can't wait till the opening bell.